I do not trust this rally yet. And the reason why is really simple. Let me show you. We're still below our short-term price. And after a weak bounce on a gap fill and a daily higher high, the first time in quite a while, we failed to hold it. Or the bears took over. And the bears took over on the Dow Jones first. The template here is very clear. We also know that being below the 50 EMA means that we're trending down in the short term. By definition, it means we're going down. We also have a lot of really important data to go through this week. So that's part of the reason why I don't believe it. But the most important reason why is because we got a monthly lower low. And I don't know about you, but my mom taught me that when we're at a red light, we don't cross. We cross at green lights. So what does that mean? Well, right now, the S&P is currently in a red light by being below 504 or printed a monthly lower low. Same thing for QQQ being below 432. So make this even simpler for me because I'm not following. I just showed you that I had a bullish template, which was shared going back to the beginning of, end of last year. And now I'm getting evidence that I'm wrong. We got a monthly lower low, but we're going to have to close below it for me to have my confirmation. So that's the reason why I'm saying I don't trust it yet. We got a red light, but the light is not yet closed out, which means at the close of the month. So the plot thickens. And if we look here to the NASDAQ, we came all the way down to basically 413, which was a back test of our 2023 high. I would call that a dead cat bounce. We've not yet formed a reversal. And the S&P forward PE is fairly high. You can note here that we're at stretched valuations. Can they go higher? Of course they can, but not everything goes up in a straight line. The correction is currently underway from roughly negative 4.5 for the Dow all the way to negative 8 for the Russell. We've talked about what that normally means as well for the S&P 500. We normally get multiple dips, mild corrections, and corrections during every year. So now let's shift gears and see exactly what the progress that the bulls made was, because Tesla's notably stinky. We'll just leave it at that. But there's an excellent chart I want to share with you at the end. I think a lot of this is relief because the names that were sold off hard on Friday are getting a bounce back. If we zoom out to a weekly heat map, man, it's still pretty red out there. This doesn't look so good. But we got a nice big bounce on fear from 31 all the way here to 38, looking cautiously optimistic. I can also show you that based on support and resistance, the S&P is now crossed over that psychological number of 500, and we're looking for a reclaim of 510 to claim resistance 3 or that 50 DMA in a February high. That's the key area for me. First, we got to get through 505 or that March low. It's really important this week. Also, we got some alerts on a lot of ETFs. The S&P failed, but we have energy, healthcare, equal weight, the Russell, and we have regional banks and emerging markets, which means the market's trying to go up on a one-day time frame. And this will be very important because we got a $930 billion wipeout since the March top. And so far, tech stocks are still a little bit weak. So NVIDIA, right? Yes, I know how to pronounce it. NVDA is the stock. NVIDIA is the name. The only company that's really actually putting up and surpassing estimates is this company. Otherwise, looks a little bit bleak. And investors are growing skeptical. So what this really means is that if we're going to get the bounce, like we see here on the Dow Jones, if that repeats on the right-hand side or the S&P, I would expect that the bounce is going to go up to at least this 50 DMA. Hey, that's a pretty good rip. If we don't pass there, I'm looking specifically for a recapture of about 518 to 520, which would be a neckline. If we fail to do that, man, we're not going up. It's that simple. Let's go back here to our simple recipe. Why? Hey, I don't know about you, but I'm a simple guy and I like simple stories. So if our 4-step recipe took 4 things for us to slide, we probably just have to undo them to start going back up. Just before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, I would greatly appreciate that. So I've gone through this many times, but since there's been a lot of new supporters and subscribers, by the way, thank you very much for doing that. All we need to do is basically undo each step. We have to reclaim the 50 DMA. So far, we're not. We're below it. That's the blue line. It's at roughly 510 right now. So we got to reclaim the 50. Then we have to stop going down, which again is at roughly 511, 510. We're breaking this current red line or the downtrend. If we don't do that, we're probably not going to go up. We do actually have a hollow candle today. A hollow candle means that we're closing higher than we opened. So, hey, at least for now, we got one of these things happening and we're not going up. So if this is the low, then we're going to have to set a higher low in order for there to be an uptrend, like we had over here, right? Low, high, higher, high. That's what forms the uptrend. This is really simple. So I would really encourage you to think about there being a lot of noise this week. So focus on levels, which is exactly what I'm trying to show you. All right, now let's go through the rest of this bullish story because, hey, not going to say the market doesn't look good. Nice 1% rip is nothing to complain about. But as we look at the charts in a few minutes, you'll understand my skepticism and the reason why I'm saying I don't trust it yet. That's the key word. All right. Now let's look at a few key charts because I think this is where it really gets interesting. If we look here to, let's just look at QQQ. And what I note here is that we did not even manage to print a daily higher high. We have an inside bar. It's hollow, which is constructive, but man, that's a weak bounce. We basically bounced off a gap fill twice, and we're not really gathering up a lot of momentum. So what I think will be interesting is to look at these individual mega caps because that's what it's really all about this week. Look at this complex here. So we got 1, 2, 3, 4 candle closes below that 50 DMA. That's not good. And what we often look for is that price is king, but does the volume confirm? Man, that looks like a pretty big sell. Yes, that's a record volume day on this ETF. It's massive. So we're declining and we have bearish volume. For me, that's not good. All right, now let's move forward. In order of market cap, Microsoft stopped going up and we got 1, 2, 3, 4, 5, 6 days closing below that 50 DMA. That's a trend change. Remember, we just talked about this. Let me pull up my first one here. This is so simple that I want you to remember it. The 50 DMA is considered the short-term price. So if we're below the 50 DMA, we're trending down. Yes, these are all fantastic companies, the best companies in the world. Hey, but even these stocks can go down. In the short term, they're currently below. I also talked about on the weekend how this could be constructive because selling off into earnings actually means that some froth is getting taken out, and this could actually be quite good. I also talked about these stocks specifically and their earnings estimates on the weekend video. Stay tuned till the end if you want to see that. Apple stinks. First chance it had to test its 50, it got rejected, and there's a death cross. That's the word death in it. It's not good. All right, moving forward here, we have a look to NVDA. 2 candle closes below that 50 DMA with an inside bar and bearish volume. NVIDIA does not report for a while, but the important thing is that it is currently below its 50 DMA for 2 days in a row. So NVIDIA is going to have to recapture. Here's the part that I like about this, though. We're closing at or near the high of the candle, which means that tomorrow we can likely get a higher high. That's the probability. The question is, where do we find sellers? Do we find sellers at 800 psychological? Do we find them at 850? I don't know. Pay attention to it if you invest in the stock. Looking here to Google, stock looks good. It's in blue sky territory. One of the only ones which is actually moving higher. Amazon, did it close below? Closed at 17723. Yes, technically we have 2 candle closes below that 50 MA. This one doesn't look terrible, but what it did not do is form a higher high. We have 179 and 178.87, which means we were off by about 13 cents. Amazon is a terrific company. I love it and use it all the time. I just got a text saying I have an Amazon package ready for pickup. But again, there's a difference between the stock and the company. Please remember that. Looking at Meta, we also have 2 consecutive candle closes below that 50 MA. So a lot of these are starting to lose momentum. Look at Tesla here. At the first chance to sell the rip, which is what I alluded to in the video, man, they did it. We did not make it to our gap fill going back to January of 2023. We did not even go to test the gap going into Friday, right? Sell it. We got 1, 2, 3 massive holes. That's a gapping crap. The chart just cannot get it up. Elon needs a little bit of Viagra. So that's it for today's video. If you want to watch more, tune into our live stream now queued up on the left-hand side. If not, come hang out with me at 9:15 and 9:30 tomorrow. Thank you very much. I'll see you on the next video.